Hello everyone, my name is David Varsimashvili. Are compliance regulations becoming so complex that they are killing the businesses? This compliance is no longer a side function. It's a core operational requirement. AML assessment is no longer just a regulatory requirement. It's a fundamental necessity to safeguard organizations from financial, legal, and reputational risks. Do sanctions work or not? The answer is both yes and no.
Hello, everyone, and welcome you to this webinar brought to you by the Soltesz Institute. My name is Viktoria Soltesz, and I joined forces with Aya, who is the Mr. Open Banking. He is the one who knows everything about open banking. So I thought that he is absolutely the best person to ask all around open banking. What's the latest? Get back to the basics. What is open banking? How does it affect us? How can it benefit the business? And just talk a little bit about the AI as well and the future of not just open banking, but payments and banking overall. Where do we go in this age of AI? So thank you so much for joining us. Please tell us a bit more about yourself and how one become Mr. Open Banking. What's your journey which led to you this amazing title?
Thank you very much for having me, Victoria. It's a pleasure to be here. The short version of the story is that I was an architect at a major Canadian bank for 15 years. Prior to that, I had an internet startup in the 90s, and my whole world was APIs and integration. That was my specialty. That's what I did. For the bank, I was the head of the integration practice. I wrote our integration standards. And late in my career at the bank, I started speaking at many conferences about this very unique approach we had taken to APIs, microservices, and what ultimately became service mesh. At one of these events, I met a gentleman named Gunnar Berger, who was the head of open banking at Nordea, a major Nordic bank. I had never heard this term, open banking, before. And I thought it was sort of a made-up thing. Like this was just something that Nordea had come up with for a fancy title. I took Gunnar out for drinks, and he explained to me that, in fact, open banking was being driven by legislation coming out of Europe, PSD2. And when he explained to me what it was a little like being struck by a bolt of lightning. I was shocked. I said, wait a minute, are you telling me that regulators are compelling banks to create standardized APIs for sharing data? And he said, yeah. I went back to my hotel room and started watching YouTubes of basically European legislators arguing about things like a customer's right to own their data and concentration of power in the banking sector. And I just fell in love with the whole idea. Went back to my bank, asked my boss at the time whether I could be involved in this on behalf of the bank, and he was incredibly supportive. I became the technical lead for the bank in early Canadian consortium efforts to drive open banking forward. But ultimately, I wanted to become part of the global open banking community and become a voice helping to move it forward. That's when I came up with the idea for the podcast and the name, Mr. Open Banking. I ended up funding the development of the brand, the launch of the podcast, and ultimately made the very difficult decision to leave the bank so that I could pursue a career dedicated to the open banking space. Fast forward to today, the show has been on for 6 years. We have over 100,000 listeners all over the world. And frankly, it's been more of a success than I had any right to expect.
Wow. We have your podcast also on the Institute website. So if you would like to check it out, please do, because it's an amazing podcast. And it's not only dedicated to open banking. I mean, it's called open banking, but you're not only just talking about open banking, but actual banking and other payment methods and just discussing the evolution of payments and banking as a whole. So I think it's a very, very interesting podcast to follow. And it's so interesting to see that you just fell in love with open banking, just fell in love with the APIs and the regulator's decision and just brought it overseas. Because as you said, it originated from EU, but it's now actually creeping to the US as well, right? Is it the same type of open banking that you have, or is it different? It's not the European version, but the Americanized version of how we can imagine that. What is actually open banking and how does it actually show where you are at the moment?
So let's start with a definition. There is many different definitions floating around there. A lot of folks equate open banking with regulation, but I don't really take that approach. Open banking fundamentally is the idea of agreeing on standards, the idea that there should be common, open, shared standards for the secure exchange of financial data based on a customer's consent. That is the definition that I lean on when I approach this topic. And I think that bears out the progression of open banking over time because it doesn't necessarily define it as market-driven or regulatory-led. In fact, open banking, when it's successful, brings the market and the regulator together in some sort of cooperative fashion because fundamentally you need market forces and regulatory forces for open banking to work. But it all comes down to this idea of shared standards. Now, I'm an architect by trade, so maybe I have a technical leaning that makes me think of it more as a standards effort than as a regulatory effort or some sort of compelling market movement. But fundamentally, it is that agreement on a technology standard that makes open banking go forward. When folks say, is open banking a regulatory thing? Yes, to a certain extent it is. Is open banking a technology thing? Yes, it absolutely is. But fundamentally, it's about this move towards common shared standards that have 1 foot in regulation, 1 foot in market activity, and a technological base. Ultimately, this move towards common standards has led to broader discussions around things like data rights and a movement, what can only be called a global movement towards this idea and the benefits that go with it. You asked about North America. Yes, the approach being taken in North America is different. In fact, even the approach being taken in Canada differs from the approach being taken in the US. And that's one of the things about open banking. Even though you have this common definition, as it spreads all over the world, and some form of open banking is now in progress in over 100 countries, it is different. The approach taken is all wrapped up in the culture within that country, the relationship that people have to their banks, the relationship people have to their data, the relationship people have to their government, and how exactly the regulator and the market are related in that country today. All of these influence exactly the approach that that region or that individual country is going to take to their open banking regime. So it's quite complex. It's not a one-size-fits-all thing. It differs greatly from one place to another, but all of the efforts fundamentally are after the same thing, this establishment of common open shared standards for the secure exchange of financial data based on consent. I'm happy to elaborate on the specifics between one region and another if you'd like.
Yeah, exactly. Because one of the questions is really about, is open banking happening all over the world? And who is ahead? Who is behind? All over what's happening and how different countries are affected? Because you would think that banking is an international thing, making all banks open in a way to create open banking, to share the APIs require that everything is in the same level. So now the data, now the information is flowing through, harmonized all over the world. But is it the case? You mentioned that open banking could be very different from country to country. So what's happening in the world?
So let's start with that statement you made that you would expect banks to be open. That, in fact, is generally, historically, not the case. That's sort of why when I first heard about open banking, it was like being struck by a bolt of lightning. I worked at a bank for many years, and this idea that banks would sort of willingly accept a regulation that compelled them to share this information at zero cost, no less, in the early forms of the legislation. That was a big deal. Historically, banks have considered the customer data that they hold in their proverbial vaults to be theirs, even though it's related to the customer. It's not something that they have to share. They can decide whether they want to share it, and they can decide if they want to charge for the privilege. Open banking sort of says, no, not necessarily. That data belongs to the customer, and the customer should decide who they want to share it with, as long as they can do so in a secure fashion and based on their consent. So this was fundamentally a game changer for the way banks thought of their relationship to data. This all started with the PSD2 regulation in Europe, the Payment Services Directive 2. That was the first piece of legislation that said, okay, hey, European banks, we have to achieve several goals, including preventing the kind of crash that was caused during the 2008 crisis, which the Europeans reckoned had a lot to do with a kind of concentration of market power. By introducing open banking, they expected to bring a lot more players to the table, drive more financial innovation, so innovation within the financial sector, and bring more transparency to the financial sector. And all of those forces would create a system that was more resilient, more fair, and more transparent. That was the goal in the UK. So through PSD2, you saw the emergence of a number of standards bodies. The dominant one eventually became the Berlin Group, and their standard became the way to create APIs that supported consent-based data sharing across the European Union. Around the same time, shortly after, you saw the UK come along and introduce UK open banking. They added some things that the Europeans missed, notably explicit user experience guidelines, which made for a much more consistent experience, and this notion of a trust framework, which allowed participants to become accredited and to track that accreditation in a way that was more robust than the EIDAS system that the Europeans had implemented. From there, Australia took a big step forward and introduced something called the CDR, the Consumer Data Right, which was unabashedly cross-sector, cross-economy. So instead of just being within the banking sector or within the finance sector, the Australians said, why don't we do this across the whole economy? If customers own their data within financial services, then surely the case can be made that they own their data in all sectors. So they said, we're not going to stop with banking or finance. We're going to move to energy. We're going to move to telecom. We're going to move to healthcare. And they are on that journey today. Fast forward a little bit, and Brazil got on board. In the space of approximately a year, they went from what was essentially a plan to one of the most mature open banking implementations in the world, with the UK approach to a trust framework And notably, they integrated their system with their payment rail, PIX. So although other open banking systems had introduced this notion of payments as part of their open banking regime, so on the one hand, you've got read access, which lets you read all of the customer information and share it. And then you've got write access, which more or less means initiation of a payment. The UK did that. Europe did that. The Australians, in fact, created a generic function called action initiation. But the Brazilians were the first to actually tightly integrate their open banking regime with their PIX real-time payment system to great success. PIX has become an enormous success, and its success has brought open banking along for the ride. Since then, the Gulf region has exploded with a number of open banking initiatives. Africa pushes ahead. And you brought up North America. North America is probably the latest to the party in terms of geographies, but that doesn't mean that some form of open banking hasn't existed in Canada and the US for a long time, largely based on data sharing methods that existed prior to open banking, such as screen scraping. In fact, if you asked an American, they might say, we've had open banking longer than anybody, because in fact, screen scraping based open banking has existed in the US dating all the way back to the 90s, and in fact was used beyond just the banking sector. But when it comes to bringing true standardization and the support of regulation to bear, the US and Canada are still pretty early in their journeys. Well, frankly, that's a whole story, in particular in the US, with the roller coaster that their Section 1033 regulation is currently still on.
Wow. What do you think, in your opinion, then what is the biggest benefit that an open banking brings to the society? Because as soon as we have seen Brazil catch up with PIX and immediately the instant payments started to flourish, I can pay immediately the vendor can pay their own vendor quickly. So the money moves quicker, society is growing in a much faster scale. Now, what do you think that in this case that North America is a bit back? Does it affect, or do you have alternative ways which are not really pushing open banking further because we've got something similar which is working in a similar way?
So let's peel that onion a bit. Part of what you brought up are really the benefits of having a real-time payment rail, which is in and of itself a movement that you're seeing all over the world. Now, I talked about how open banking regimes often intersect with payments. We can talk about that more. For example, the PIX integration with their open banking efforts. But open banking in and of itself really is about data sharing and the benefits that go with that. Fundamentally, the goals that you're trying to achieve are one of the things that make open banking implementations different from one region to the next. In some places, it's about increased competition and trying to level the playing field and bring more innovative financial services to market. That was certainly one of the priorities in the European Union. The thinking being that you would increase market stability by reducing the concentration. In places like the UK, they sort of followed that script, but they also wanted to bring stronger innovation and start to move towards what has come to be called a digital public infrastructure, DPI. This idea that you're creating a foundation for the digital future and starting with finance. In many other places, notably Brazil, you'll see one of the clearly stated goals as financial inclusion, addressing the challenge of the unbanked. Again, the thinking being that by allowing data and money to flow more smoothly across the market, you're going to be able to introduce financial products that can address the challenges of the unbanked. It also makes it a lot easier for public policymakers to introduce tools that allow them to do things like disbursement checks and charity programs and food assistance programs through this same infrastructure that you're using for data sharing. So that's certainly one of the benefits. All of these things are going to come with open banking, but the importance of in one place or another is going to be different. If you take Canada as an interesting example, although absolutely the increased competition is a benefit. The financial inclusion is a benefit. Canada, like everywhere else, has a certain degree of unbanked. But a major factor for the Canadian open banking regime is reducing the systemic risk that comes with screen scraping. So screen scraping is essentially a method of data sharing that requires you to share your username and password for your bank. This creates a significant risk where there's a large threat surface for malicious actors to take advantage of, and a lot of credentials existing out there in the wild in unregulated systems. This is viewed by Canadians as a systemic risk. Screen scraping is widely used. Canadians don't like risk. So when they look at their open banking, they prioritize this reduction of risk. All this to say there's many benefits that come with open banking, but the prioritization of those benefits is going to differ from one country to another.
Right. And how about the customer right for their own data, as you mentioned at the beginning? So this is a different approach. It's no longer the bank owns my data, owns my money, and makes a decision of what I can and cannot do. It is my right to choose a provider. So basically it just creates also better services for me through competition. Am I right here?
Absolutely. This question of data rights is very much at the heart of open banking. I told my brief story about how I became Mr. Open Banking, and wrapped up in that moment was this thinking that fundamentally the relationship that we have to our providers today is a little broken. And I'm certainly not the only one to write about this or talk about this. Today, there really isn't any kind of enshrined legal notion of data rights. The closest that we have around the world are privacy rights. And oftentimes, the legal frameworks that underpin privacy rights harken back to an era before anything you would call digital. They are really built upon a foundation of privacy that comes from the real world. We live in a very different world now. We live half of our lives in the digital domain. Our data flies around from one provider to another, but it's not really our data, is it? Whether it's a bank or whether it's a large tech provider like a Google or an Apple, you don't really have a legal basis anywhere in the world, except for emerging now in Europe, to say, wait a minute, that stuff you know about me is mine, and I have certain rights related to that information. For example, as you start to see emerging in Europe, a right to forget, which has become a basis for several of their digital laws that they're starting to introduce. That is the kind of thinking that underpins something like open banking. At its heart is this idea that customers have a right to know what is being done with their data, to decide who it is shared with, for how long, for what purpose, and to turn that sharing off if they so choose to their benefit.
What are the different technologies involved in open banking? You mentioned obviously the data sharing, but it is not just about data sharing, right? It is sharing more information. What are those different technologies?
Hello everyone, my name is Viktoria Soltesz and I'm the founder of the Soltesz Institute. Startups fail, and if they fail, most probably they are failing because they don't have the thought out and proper channels for payments and banking.
Hello everyone, my name is David Vartimashvili. Compliance is no longer a side function. It's a core operational requirement.
Hey, welcome everybody. I'm Marcia Klingon-Smith. Instant payments is transforming the way money moves all across the globe, across all the different industries.
It is not just about data sharing, right? It is sharing more information. What are those different technologies?
So there really are three pillars that together make up what you would call open banking as a whole. We touched on one of them, and that's payments. So you've got open banking, which you could consider roughly this idea of data sharing based on consent, that I'm going to agree to share information from, say, Bank A with Bank B, or Bank A with FinTech A. The second pillar is payments. So payments is crucial because now that I have all this information, and I can feed it to providers who can make deductions based on that information, essentially, say, read my financial profile from multiple institutions and come up with advice on how I should save for retirement or what kind of mortgage I should apply for. At the end of the day, that's going to require me to move some money around in order to take action based on the insights gained from all of that data. These are words you're going to see out there in the community, insights based on analytics, and then taking an action through payment initiation. So you need payments to essentially act upon all of this intelligence that you've gotten from all of these different sources that now support standardized data sharing. So payments is a crucial part of it. And in fact, for those out there wondering, well, how do I make money on open banking? It's often when you add payment capabilities that you start to open up several commercial avenues. The third pillar, also very crucial to completing the whole picture, but in many ways a lot trickier, is digital identity. You're starting to see digital identity emerge in various forms around the world. If open banking is different from one country to another, digital identity is very different from one country to another. How exactly you approach that problem is all wrapped up in politics, again, in culture, what will be accepted by a given population, the strength of the government in that particular place. Probably the most famous digital ID scheme, and it's enormously successful, is Aadhaar in India. But you're now seeing the formalization of digital ID and, in fact, tools like age verification in the UK with the introduction of their smart data bill, and pockets of it emerging in other places around the world, such as Connect ID in Australia. So how you solve that identity problem is crucial because, frankly, if I want to capture someone's consent to share data, I better be able to verify who that person is in a strong fashion. If I want to initiate a payment, I better be able to make sure I'm authorizing that payment from the right person. So being able to tie all of this activity back to a verifiable individual and their credentials is crucial. However, introducing something like a federal digital ID in an environment like the US is going to be very, very politically challenging. So how exactly you solve that digital ID problem is a tricky one, but there's no question that payments, open banking in the form of data sharing, and digital ID are the three pillars that you need to make all of this work together.
Let's clarify this. What's the main difference between the digital ID and the information that the banks are holding on behalf of you anyway? Because if I'm calling the bank, they know my passport number, my all documents, all the information that the digital ID would have given them anyway. So what is the big fear that people are afraid of, that, okay, I say no to the digital ID because that harms my privacy rights. However, I am giving all this information to banking anyway. What's the difference?
Yeah, that's a great question. And it's funny that you brought up the banks holding your customer information, but not Google or Apple or Facebook or Meta, rather, who of course own a great deal more. But there's that key word again, own. The fact is that even though they store a lot of this information today, there really isn't concrete legal mechanisms to say, well, wait a minute, I know you're providing me utility by storing this information, but is it really mine? Do I have a recourse to have you forget about it? Do I have a recourse to pick it up and move it somewhere else? What if I want to use it with a provider who you consider a competitor? These kinds of questions have not really been answered. Digital ID in its true sense says, no, there's something that is you, that is yours, And you should have a measure of control over that identity. And you should be able to use it however you choose and have a transparent way to track how it's being used by others. In the same way that when you were issued something like a driver's license, you can use that license for whatever you like, to enter a club, to buy certain goods that require identity verification. There really isn't anybody who can say, you know, I own that and I'm going to prevent how you use it or where you use it. Now, for a driver's license, it's a physical thing. So a lot of parallels come along to cash. A lot of people defend cash in the same way by saying, I don't want digital money because this cash is a kind of freedom. I don't have anybody watching how I use it. I can use it however I want. It's the same sort of thinking with ID. Unfortunately, we live in a digital world and we use our digital identities all the time to access all sorts of services and buy all sorts of goods. But today, those identity facilities all come from one provider or another. There really isn't a unifying structure saying you have certain rights related to that identity, that you can control how that identity is used, and it fundamentally belongs to you as opposed to belonging to the provider who happens to store it. And that's really the difference, whether you're talking about the bank storing your customer information in the form of KYC, or someone like a Google or an Apple or a Meta storing that information. Now, that doesn't mean that the pipes don't have a certain cost, and there should be incentives for those providers to provide that utility. However, your digital identity should be something that you can control and have the same kind of rights that are related to, for example, your data sharing capabilities. The question of whether that service is provided by a federal agency or private market players or something in between is a complex question.
That's right. And we need to also, I feel, mention the risk and the cost for the banks and the financial institutions, because until now, you onboard a customer and you're good. That customer is going to use you as long as you're not making some terrible mistake. You're like messing up the customer experience, or you're cheating something on the client. The client is usually, as soon as they open a bank account or start to use a financial product, a mortgage, they don't really like to change unless there's a major problem with that financial product. But now, since I have all my data, I have the right to keep my finances with a different provider. Banks start to lose a large amount of customers just by having this ease of changing the provider. So what do banks do to eliminate that? What is the risk on the bank that they still need to do all the onboarding, all the KYC checks, all the costs, and then the customer has all the right to change provider, leaving them no profit?
Yeah. So what you are describing, I would view as building moats. I talked about the introduction of open banking in Europe, and this is exactly the kind of behavior they were looking to address, that banks make it difficult to switch providers, for example. Their thinking in the early days of open banking was, well, that's sort of ridiculous. That's why you end up with this market concentration that fundamentally leads to market fragility that leads to crises like what happened in 2008. People should be able to switch providers, and banks should compete based on better products. They shouldn't be winning because it's hard to switch. They should be winning because they have better rates, or they have better incentive programs, or they have programs that are more suited to a particular type of customer. That's what makes capitalism work, is dynamic competition between market players on a fair and level playing field. So that is the same answer for something like identity. Whether it's identity or account information or the ability to facilitate payments, using those capabilities as a moat and saying, well, you're going to stay with my bank because it's really hard for you to pick that up and move it somewhere else. That's ridiculous. And in my opinion, it's ridiculous for something like search as well. In that we talked about data rights. Ultimately, if you travel in open banking circles, you'll hear this notion of open banking becoming open finance. ultimately becoming open data. The Australians were the first to go down this road with their consumer data right. And their thinking is very clear that you should be able to switch providers, not just in finance, but in healthcare, in telecom, and ultimately in tech. So in the fullness of time, if I want to pick up my search history from Google and move it to DuckDuckGo, that is something that I should have the right to do. And if Google wants to keep me as a customer, they better do a better job of being a search engine and the things that go with that, such as protecting my privacy and giving me control over how my data is shared and used. So this idea of moat building and preventing moat building and rent seeking is very much at the heart of open banking and ultimately what will become open data.
I think we need to talk about AI a bit, because if we are talking about the future of finance and the future of technology, it's just inevitable that we have to talk about AI. What do you think, as AI continues to be adopted by the banking sector, how will this affect open banking and other areas of banking and finance as well? So not just open banking, I'm just curious about your opinion on the whole industry.
Yeah, I think AI is going to very much accelerate open banking efforts. And the reason is, if you look at how AI works today, it's essentially reliant on a whole bunch of data that it scraped off the internet and on other sources and didn't really ask permission for. It is an acceleration of the kind of model that has built up the modern internet today, which is to say a handful of players who have essentially monopolized access to a bunch of data and more or less called it theirs. Open banking is fascinating because it takes a stance that, wait a minute, that data over there that you thought was yours, it isn't really yours. It's kind of mine, or at least partially mine. And that same logic, as we've talked about, that applies to banks, ultimately applies to providers of all stripes who have some form of data related to you. So where does AI figure into all this? If AI today is dependent on all of this data being quote unquote free, and they used it without asking permission, well, where does the buck stop? Is everybody just going to allow that to happen? I hearken back to the writer's strike and actor's strike from a few years back. I think that was fascinating because you essentially had people saying, enough, that I put a lot of work into this material. I put a lot of work into becoming a great actor or actress. You can't just take my work, take my likeness, and decide this is yours now, and you're going to use it to power generators. That's not fair. We demand something that is more fair. Now, that's not to take anything away from the incredible power of AI and the utility of AI. It absolutely creates the foundation for a whole new generation of technology providers, much like the internet itself did in the 90s. But we have to revisit this question. It can't just be a one-sided bargain where AI is allowed to take all this data without giving anything back. This question is becoming more pronounced, especially as AI moves into this agentic world and expects access to data that we fundamentally consider private, such as our financial data. It's one thing to say such AI agent ChatGPT, let's say, help me book my vacation based on a bunch of public information out there on the internet. It's another to say, hey, ChatGPT, help me manage my finances. Here's access to all of my bank accounts. Please come up with a retirement plan. People rightfully expect certain protections to be in place in the latter case. And that's going to require a hard look at the plumbing that powers open banking and figuring out how exactly it's going to support AI agents in the future. This is very much an acceleration of the kind of access that fintechs use open banking for today, because it's a lot more access from a lot more agents that need a lot more data. So we're going to have to figure this problem out. You're already starting to see this emerge in the form of announced deals between certain AI providers and certain card providers or certain banks. who understand full well that on the one hand, you have the utility and power and innovation that comes with AI, but on the other hand, you have the trust and consent models that drive the retrieval of secure data. Those two have to work together, and open banking lays the beginnings of how that's going to be done.
A couple of months ago, that was the story which shook the whole industry about an AI agent who is able to make payments on its own. So if you're telling your AI agent that, hey, connect through open banking, obviously, all the financial data that I have, and as you said, just move my mortgage somewhere else, or actually just initiate a payment, that it can do. So do you think that now the threat is tenfold? Now we can't really pinpoint who is going to make that decision and who is initiating that transfer, because everything is so easy and so freely available. Was it not better when the banks actually had some kind of safekeeping of the data, of the transactions, checking you from every angle, because that could mean a bit more security? Or you think that with this AI, it's actually good through open banking to make everything much more available?
Well, you've hit the nail on the head, Victoria. That's exactly the point, is that people expect certain protections when they do certain things online. And a lot of those protections are in the area of money and money movement. To say I've got an AI agent that's just going to have unfettered access to my bank information and my bank capabilities, such as the ability to move money, the most non-technical of people would say, well, wait a minute, that's dangerous. I want to be careful with how exactly I do that. And if you look at the movement of banks in the market, they are acutely aware of this risk. At the same time, they very much want to take advantage of AI and introduce agents and automated financial planners, all of which are really amazing. If you see some of the early prototypes, it's very much something you can instantly see the value of. But how exactly it's doing that and the pipes that it's using to do that, we have to find ways to build in the similar protections that banks have always built into their systems into these new forms of interacting. Because, of course, you're not interacting with a person anymore, are you? You're interacting with an agent, with an automated agent. Fundamentally, if you do that in a way that's unprotected, it's going to radically increase fraud. It's going to radically increase the threat surface. So you have to put these controls in. And that's where things like the open banking technologies around consent, identity verification, verification of payment, recourse if something goes wrong, so liability frameworks, et cetera, all of which play a fundamental role in allowing AI to become what it ultimately wants to become. But letting it become that without the controls on the other side is incredibly dangerous. Yeah. I mentioned I'm an architect by trade. You can kind of think of this in a technical sense as the AI is the client and open banking is the server. You have to have both the client and the server move in tandem so that the protocols they're using to share the information are secure, reliable, and trustworthy.
You think we opened Pandora's box with the regulation 6 years ago, not even knowing how quickly AI develops, and now it's just an unfortunate collision what happens in the future?
I think there is a certain inevitability to it. Maybe the architects of PSD2 didn't have AI in mind, but they certainly had fintech at large in mind, and they certainly had innovation in mind. This idea that we're not quite sure what's going to happen in terms of how data is shared and used and leveraged and turned into value, but we know that something is happening, and it's very different than what existed there before. Ultimately, that turned into the emergence of AI, but it's a good thing that that particular Pandora's box was opened, because it does provide the beginnings of answers to some very, very important questions.
And you think we will see more harmonization through these AI agents? Because if everything is online, money flows internationally, now maybe AI is going to speed up the harmonization and force countries to agree on the regulation, on the data security, on fundamental questions that even today they are arguing. And that is the reason that we have so different regulations in different jurisdictions.
So remember where we began with our definition, that key word, standardization.
Mm-hmm.
And we've come full circle. That is exactly why when I talk about the definition of open banking, that is the beginning and the end of the definition, standardization. That's what makes open banking exciting. This notion of consent, the driving of identity, this whole idea of benefits to various folks like the unbanked, those are all valid. They absolutely are results of open banking. But what is open banking really? It is standardization, because it is the establishment of common open shared standards, such as the standards that drive the internet itself, that lead to the kind of harmonization you're describing. I was recently a judge at a hackathon that involved the creation of various hackathon entries to use open banking data at the back end. And predictably, two of the winning entries were agentic AIs. They were essentially a kind of automated financial advisor. Very cool. Looking at them, it felt like you were looking at the future of banking. And one of the questions from one of the judges was, well, wait a minute, how does your agent deal with all of this different data coming from all the different banks? Do you have to kind of normalize it and rationalize it? And the answer from the entry was, well, no. That's the whole point of open banking. I don't have to do that. The data is the same, no matter where I go. Ultimately, by establishing standards, what that means is, whether you're dealing with a big bank, small bank, credit union, fintech, the data that you're getting back is the same. The way that you call that provider is the same. What that means is you get the harmonization automatically. Payments work the same all over the world. Digital identity works in a mechanism that is interoperable. And ultimately, data sharing works in a way that can span the globe as well. So no matter which bank you're dealing with, no matter which fintech you're dealing with, you can rest assured that the mechanisms they use for sharing information in a secure manner based on your consent works the same. That harmonization is what will allow something like AI and whatever comes next to flourish. But it's crucial that we put those pipes in place before we allow that side to flourish.
Sure. And what happens next? How do you see open banking evolving over the coming years? Because right now, from what we heard, it's pretty awesome as it is. But is there any new opportunities? Is there any further steps that we can talk about when we are talking about open banking, or how open banking is going to replace current systems or just enhance whatever we have already?
So, as I mentioned, even before the advent of AI and ultimately agentic AI, open banking is on the march in over 100 countries. This idea has taken hold. It is not going anywhere. It's here now, and it's here to stay. Even if certain countries try and take their time or take different approaches to it, it has just become so pervasive that it's going to continue to spread. Now, we talked about how AI is pouring fuel on that fire. That is very much the case. The more AI starts to impinge upon data that we consider private or data that we expect to have certain protections for, the more you're going to see not only those regulatory controls put in place, but the technologies that are needed to support those regulatory controls put in place as well. So things like the expansion of trust frameworks, the increased scope of standards, which are versioning up all the time, better mechanisms for consent, solutions to things like digital identity, which are very thorny problems, and the integration of real-time payment schemes into this broader picture, this three-legged stool that is data sharing, payments, and digital ID. All of those things are going to move faster and faster in response to the accelerated pace of AI adoption. So I very much see the two as being two sides of the same coin. And the better AI gets, the better open banking efforts are going to get on the other side to accommodate those functions. That is certainly my hope. There's a lot of ideological positions that surround this question around whether data should be free, the degree to which AI should or should not be regulated. So it's going to be a complicated discussion, but I can't wait. That's exactly what I talk about on the show, and I'm gonna keep talking about it.
Nice. And before we wrap up, I just really want to ask your opinion about education and where does the responsibility end for the user and where does the responsibility start for the bank or a financial provider using that data. So it would be interesting to hear that what do you think? What is the right amount of education? Do we need education? What kind of education do we need? Do we need to talk about open banking as a standalone function, or does it need to be mentioned in the larger scheme of things? How do you educate your listeners and obviously your peers? Tell me everything about what you have in mind.
Yeah. So let's start with the word responsibility. I smiled when you said that because it's such an interesting one, right? There is this school of thought that says, well, if I give a customer control over their data and consent to control the data, then I've done my job, and my responsibility as a data provider, say a bank, is done. It's now up to them. But that's a little odd, because if you think about GDPR and the introduction of cookies to our everyday digital life, not a ton of people are reading all those cookie warnings. Since the dawn of software, we've seen these terms and conditions prompts come up, asking us, hey, do you agree to such and such happening on your PC or tablet or now smartphones? And we don't really read them. In fact, if we read them all, we would spend our whole lives reading them. The fact is that we expect certain protections to be in place without being responsible for reading every word of fine print that comes from our providers of various stripes. And we will need similar fundamental rights and protections to apply to the way we share our data as well. So the idea that it's ultimately the user's responsibility, solely their responsibility, I think is a little silly and not consistent with how we approach other aspects of our life. That there have to be certain protections, whether I decide to read the fine print or not. So responsibility is something that is shared by the market, by the regulator, and of course by the individual as well. We can't just support people if they're acting in irresponsible ways. The question of education is a little different. I have a lot of colleagues who would say people don't need to know how open banking works. They only care about the utility. They don't need to know how open banking works any more than they need to know how the 3 holes in your wall work when you plug something in. The average person does not know what happens, and I certainly don't, when you plug something into a socket and suddenly the light turns on. And they don't need to know. All they need to know is, this is great. I can plug things into the wall and the lights turn on and the washing machine works and my television turns on. There is an aspect of truth to that. Certainly what people will care about more on an everyday basis is whether they have better financial products, whether they can move their money around in ways that are more beneficial, whether they can integrate with this amazing new AI agent that they have and allow it to help them plan their retirement. They don't need to know how it works. However, I'm of a different mind. I think we are entering an era where these questions of data ownership and data rights are becoming fundamental to how we view ourselves, how we view our governments, how we view our society. And it's not going to appeal to everyone any more than politics appeals to everyone. But there is a significant cohort of people, especially young people, who care a lot about these questions of data ownership and data rights. And for those people, providing them an education around how open banking is starting to address these questions, that this isn't an impossible problem to solve, that there are answers to how you can protect and own and control your data is crucial. Because suddenly the debate can turn from one of revolution and burning the whole system down to, wait a minute, there is a better way. we can build a better internet, one that is more inclusive and ultimately more fair.
It's amazing. I learned so much through this conversation, and I'm very, very happy that we had this chat, because it put things in a complete different perspective, even for me, who is dealing with banks and payment providers and issues every day. But still, it has a very nice message of you really need to understand the underlying reasons to be able to justify and understand what is happening today. That's when you really understand the risks, and that's when you can make all informative decisions over your money and who is using it, how is it being handled, who is storing it, how is it being spent. So it's absolutely fascinating. Aya, is there something that we haven't talked about but you feel strongly about before we wrap up?
No, I think we just about covered it. Only to say that I hope we inspired some folks out there to take a closer look at open banking and the way that it figures into this larger puzzle that is our digital future. I know AI is getting all of the attention, but as I said, I think there's another side to that coin, and open banking is a big part of that other side. And only to say thank you, Viktoria, for the opportunity to chat with you today. I enjoyed it a great deal as well.
Thank you so much. And I would like to encourage everyone, as I do, please share your comments, your questions, your ideas, your real life cases. Eyal is very friendly as well, and he's just as passionate as me about the subject. So I'm sure that he will be very happy to hear your comments and questions as well. You will see everything on the screen, but please do feel free to reach out to us and start talking about it, because that's the only way when we can create a transparent and ethical industry together, when everybody can make informed decisions about their money, about their banking, about their financial provider. So thank you so much for being here today, and looking forward to catching up soon. Thank you for everyone who was with us today.
Thank you, everyone.
Hey, welcome everybody. I'm Marcia Klingensmith. Instant payments is transforming the way money moves all across the globe, across all the different industries. A recent study showed that 42% of instant payment transactions actually happen on the evenings and weekends. About $200 billion is currently locked up in the European financial system today. And instant payments really can help unlock this liquidity. The future of finance is instant, and those who adapt will thrive.